stick around because I want to bring on another man who has some pretty serious expertise in the way of handling all this. That would be the former OMB Chief Economist and Senior Vice President for the Committee for Economic Development, Joseph Minarik, who joins us now. And Mr. Minarik, I mean, when we look at this kind of weighing out historic slowdown with historic stimulus, I mean, we got the Fed balance sheet at a record right now. When you look at what's being done, a lot of arguments being made that not enough is being done because it takes so long. The delay, as we heard today, in terms of getting the stimulus passed and then actually back into practice and helping out Americans who are hard hit here, the lag time's too long. So what do you make of what we've done so far and what more needs to be done now?
Zack, you've diagnosed the problem, and Chairman Powell, I think, was pretty clear. They are doing things they have never done before. I mean, this is like the line from Star Trek, and because of that, they have to create new programs. You need the Treasury backup, which I think Brian suggested. That's why suddenly the Treasury and the Fed have got to play ball together. On top of that, of course, the Federal Reserve, Chairman Powell, is walking into the middle of a partisan dispute. You have the House just passing a bill. The Senate says they won't touch it with a 10-foot pole. The issue, of course, that's going on there, I think that they could probably agree to do something. But the question is, what are they going to do? There's concern about bringing into the playing field programs that have been on the table for a long, long time, and that folks want to take advantage of the crisis. So there are disputes in those areas. Yeah, but the economy is in a mess, and there's going to be a lot of arguing over how much should be done beyond what's been done already.
Yeah, I guess that's kind of the problem too when we think about the partisan nature of this next round that we're getting into here. When the Democrats come out with something that Republicans are calling a pet project bill, packed with everything that they would have in a dreamland. But when we think about what should be done versus what needs to be done, and the slowdown that we're seeing right now, when you have 35 million Americans in the last 8 weeks losing their job here, filing for unemployment. I mean, when you look at the stats, what are you seeing in terms of what needs to be done now to address all of this, rather than maybe what people would want ideally, but what actually needs to happen?
Well, we're on a seam really between trying to get employers to hang on to their employees and the risk that if employers keep those expenses on their incomes and liability statements, they are going to wind up not being viable when it's all over. Chairman Powell was very clear in his statement and his answering questions. The difference between a question of a viable business and a business that has sufficient cash. And so he's concerned that if we get to the point where businesses are risking their viability, we're going to need more fiscal action. And that's going to require that the Congress make the decisions. The House and the Senate are going to have to come to agreement. He doesn't want to be in the middle of that fight because all he can do is lose his credibility in the long run. So he's trying to maintain the Fed as a credible institution so that they can deliver liquidity, which they need to do. And the Congress has got to make the decisions on moving further. Mm-hmm. The PPP program has problems. Some of those are legislative in nature. You may very well need a fix there. You had an argument going on as to what's in the law and what is an interpretation of policy by the Treasury. It's all because we're in this uncharted territory in terms of policy.
Joe, it's Brian Chung here. Something that's been really interesting just about the last few weeks of commentary from the Federal Reserve is the effort by which Chairman Powell's been trying to message to federal policymakers that the deficit is an important thing, but now is not the time to be worried about that because the economy really needs the shot in the arm and that you could deal with the deficits after the fact. I want to drill in on your experience at the OMB. You're an economist there, as I understand, during the Clinton administration when you effectively eliminated the budget deficit. What's the usual commentary or the dialogue between monetary policymakers over at the Federal Reserve Building on Constitution Ave and those in the White House regarding how to approach the budget deficit? And do you think that dialogue has changed in the present day with this crisis?
I know we're in a different world, and we're going to have to deal with that. And of course, you have different kinds of conversations. You have public conversations, you have private conversations between the Federal Reserve and the fiscal policymakers. Jay Powell is absolutely right that there are enormous risks to this economy. There's a lot of damage that can be done on the way down. And so he's trying to make sure that the economy is caught and is not allowed to fall all the way down from this cliff. Meanwhile, people are beginning to show some reluctance to accumulate more debt. And we do need some serious thinking about how it is that we are going to address this problem when it's over. It's one thing to say, let's save the economy now and deal with the debt later. If the policymakers, or some of them, are concerned that the debt is going to accumulate to an extent where it can't be managed anymore, they are going to be reluctant to take the fiscal policy action that may be necessary. So what I think we need is a conversation, a quiet, rational conversation about how we are going to manage this extraordinary amount of debt when we're done. Secretary Mnuchin began to have that conversation when he was talking about what he thought the horizon was in terms of longer-term securities. We need to have that conversation quietly. We need to have policymakers agreeing that they can deal with this problem, because if they get to that point, the financial markets will become more comfortable, the policymakers will be able to take action, and we'll be able to do what we need to do to keep this economy afloat.
Yeah, and I mean, I guess some of that distortion and kind of panic that we saw play out in the credit market has at least calmed down in the short term here as we move further along. But one of the questions that continues to be raised, and we heard it today, was the question of states as they continue to navigate this and shortfalls in terms of their own budget management that's going to be coming from all this, as they see fewer taxes brought in through income taxes, sales taxes, as shutdowns continue. So when you look at that front, I mean, that's a piece of the HEROES Act and what Democrats want to do in terms of allocating about another $1 trillion for states here. But you've heard from the president that he doesn't want to bail out governors that mismanaged, in his mind, state economies and budgets there. So how do you really grapple with that, as we did hear from Chair Powell admitting that back in the Great Recession, we did see states kind of having to balance budgets hinder the recovery that came after?
We're in a situation here where we have states that you can argue have not behaved as well as they should have. We have a federal government that had a budget deficit that was rising and a debt that was accumulating faster than the economy was growing. And now here we are with a public health crisis that has hit all of those budgets extremely hard. There is the reality that states, for the most part, are living under balanced budget requirements. Even where those requirements are not strong, you still have limited access to the credit markets on a general funds basis. For the most part, the markets look at state securities to finance capital investments, not to finance general operating expenses. And so the states have a big problem. Historically, going back to the financial crisis, when the federal government was trying to stimulate the economy, the states were holding it back. Mm-hmm. And we need to recognize that. We just in the same way that we need to look at the federal government's finances from the point of view of the extraordinary problems we have today versus the ongoing issues, we're going to have to look at state government finances with the extraordinary expenses they have today versus their ongoing problems. And we can't sink the economy to try to be fiscally responsible tomorrow, because the damage that would be done is just too great.
All right, there you go. The latest from Joseph Minarik. Appreciate you sharing your thoughts on that front, and be well.
Thank you. You too.
Hey investors, Zack Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.